Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, January 26, 2017. Here's a look at the daily time frame of the ES. Right now, you'll notice that we had a very bullish couple of sessions here. What we talked about before was the previous month's high here and how bears had continued to defend. Yet every time price would break below that key 57.5 level, bulls would come in and defend and rotate this thing back up. Eventually, what we mentioned before was above 2280 would run the stops into the 25% monthly expansion target, which is 2296s. And that is what I call the R25 Pivot Boss Pivot. Here we are, we hit it, and we actually came within a half point of reaching the 2300 level, which we also referenced yesterday. So basically the stops came out, we got a nice push into this area, and now heading into RTH, you can see that we've had a little bit of rejection above those 2296s here. And this first flow up here could be nearing a point where we either go sideways from here or look to return back to the point of the breakout where bulls would look to defend and further squeeze, or where a failure at that level would imply a move back across the range. So we got to see how today continues to play out. There's early signs of rejection above that zone, but obviously this is not a full day so far, so we have to see how it continues to play out. We could see further testing in this area, but I would say right now any pullback toward 2276, 2280 could be another buying opportunity for a continuation higher overall. So we'll see how this continues to develop. But the first target here, right in play, reach right on our zone, which we were expecting to reach, and now we'll see how it develops the rest of this time. If we look at an intraday time frame here, you'll notice again the rejection that's happened on these highs. Really not a huge rejection. Obviously, we just went into 2295s and 99 halves, and we're back to 95. So it's only been a 4 or 5 handle pullback, so it's not a big deal overall. But typically speaking, when you're in a trending market in this nature right here, pullbacks are to be defended for a continuation. So this is the previous session's close price, went bid, and now we're retesting it here. Bulls would like to defend and get this thing headed into 2300 for another test at these highs. Otherwise, failure to hold this close here could rotate this thing back toward recent support. 87s were a big time area of support yesterday, and we also have an LVN at around 82, 83, which could also provide a buy. So right now, this market is in a trending mode overall. It's continued to see buying after every pullback, and that could continue here if this previous close continues to hold. Overall, still a trending structure, so any pullback likely still to be seen as a buying opportunity until proven otherwise. But today could go a long way toward getting this thing back toward 2276 to 2280. If the rejection up here at 2300 remains. All right, let's take a look here at crude oil. Crude oil is in one of the most significantly tightly coiled ranges I've ever seen for a crude. If you look at this thing over the last several days, it is significantly compressed. I mean, I don't know if you can get more compressed than that. You can see to begin the year here, it had a big push down. Prices above the previous close were also rejected. But below the 5167s, we really didn't see any acceptance. Instead, a big rejection, and then bulls came in to seal. However, we haven't seen any movement outside of this range. I mean, this is about as tightly coiled as it gets. What I mentioned in our room is right now, all of this price activity is happening below the previous month's close, and we have quietly higher highs, higher lows rather, coming into that level. And that could imply a big squeeze to come. We still have to see it happen, but right now, any push through 54 could open up a big time squeeze that leads price into 55.50 and into the next upside key levels, which you have at 57s and 59s, etc. So right now, again, we have to let it play out, but 54 is going to be a big time level here where if price pushes through it, you're likely going to see a big squeeze day with perhaps a continuation into the next HVN above 59.5. So this could be a huge rally potential, but again, I don't want to front run that event. We have to see how it continues to play out. Anytime you have such a significantly tightly coiled range, there is a tendency to test both edges of the range before you see final direction. So Be cautious here and continue to watch the range, and price will let us know what's going on. On an intraday basis, again, you have to be very careful here because there's not a whole lot of range to play with. The range has gotten significantly coiled. You're seeing a lot of back and forth, so there's basically non-committal to either direction. Right now we have 53.5 on top and 52.5 on bottom, and there's been a range here where it's developing within that zone. So any test into 52.5 could be an opportunity to bring it back toward 53. Likewise, any push into 53.5 could be an opportunity to bring it back to 53 again. So right now it's still a fade the edges type of event here until we see confirmed breakout activity outside of this range. Let's take a look at gold. Gold had a major continuation to the downside. One thing we started the week with, our first pre-market report Monday morning before the open, referenced the weekly PivotBoss pivots. So if we bring up the weekly pivots here, you'll see again the level I've been referencing is right here, the previous week's high price. And this previous week's high was getting rejected early Monday morning, and it stayed kind of that way. Tuesday it was rejected and it started downward. And the expectation is anytime you're going to reject at the previous high, you're likely going to go back toward the previous week's low. And that's exactly what you saw here. There was an opportunity here where bulls were trying to trap below the previous week's low, and that offered a day trade back toward 1200, 1201 in terms of VWAP. But as we knew, the market was clearly headed lower here once we got into the room, and 1201s was an easy area to defend for bears. And now you can see that we have lower highs day over day, lower lows day over day, and we've now reached the S25 pivot, which is the weekly 25% expansion of the previous week's range. And we could be looking at more pullback into 1180, so that's the next key level down. If, again, this price cannot maintain back above the previous week's low, the expectation would be a continuation toward 1180 in the short term. All right, let's take a look here at the NQ. The NQ released a ton of energy to the upside. As you'll recall, one thing we were looking at, if we bring up the monthly pivots again, there it is. The previous month's high price right here, and that was the December high, that was 49.94 half. When we started to push through it, we were looking for signs of a trap that could lead us back down. But as we continued to push higher with higher highs and higher lows, the expectation was a pullback into 49.94 would be defended by bulls for a shot at new highs, and you can see that was the case. However, it wasn't an emphatic move. I mean, it was a nice rejection the day of, but then it went sideways for several days until this recent burst to the upside. So again, great trade location here overall. Kind of got stagnant for a bit, and then boom, a big upside move into the 25 and 50% target. So this is the previous month's high. This is the R25. That's the 25%, and this is the R50. So that's the 50% expansion of the previous week's range, or previous month's range rather. So right now, we have to see, can price hold above these 5140s? If not, we could see a little bit of a rotation back down. And in the current market, as I keep mentioning, the flow is to the upside. So any pullback is still an opportunity to buy until proven otherwise. So while there could be a short-term rotation, that's a counter trend move. You got to be very careful trying to sell that at this time. At the moment, it's much safer to look to buy into that weakness for a continuation to the upside until proven otherwise. Now, taking a look at the intraday time frame, you'll see here that, again, very similar to the ES here, price pushed to highs and got a little bit of a 3-point reversal here and it's pulled back. We have a flat VWAP here after initially going sloping higher, and now we could be looking at kind of a fade the edges type of day here. So basically, any retest of the highs could be a fade back down. If price tests the overnight low, it could be a fade back up. And overall, again, the trending nature of this market is up. So pullbacks are to be defended until proven otherwise. LVNs are very, very popular for defending as well. So right now, after the trending market, there is a tendency to find some sort of value or try to create balance. And that could be the case here. With after this big trend, we could be looking at some sort of range that develops at these highs. So we'll keep an eye on this as it heads into the rest of the session. Good luck and trade well.